What's up, YouTube? This is Leo with DRIPCalc. This video will be about YMAX and YMAG, the funds of funds from YieldMax and their comparison, as well as my opinion as to which one of these funds is better, which one I am personally buying, as well as review of some holdings, some updates about our YieldMax page, and also we're having a Cyber Week sale, so I'll talk a little bit about that. In any case, let's begin. But first of all, I need to mention that this video is not a financial advice, and I'm not a financial advisor. If you want to invest some money, you should seek advice of a licensed professional. Second thing, guys, please smash the like button. It really helps with the channel. If you have any of these funds, let me know in the comment section below which ones you like better. Maybe not just YMAX and YMAG, other YieldMax funds. Also subscribe to the channel. That would really help and give me some more motivation to make these videos. And finally, at the end of the video, I'll talk about the Cyber Week. So let's begin. Okay. Anyway, YMAX and YMAG, they are basically, so YMAG holds 7 YieldMax funds that correspond to the Magnificent 7. And YMAX basically holds all of their funds that are not short. And that's not OT. And a couple new ones they created, like Biggie and SOXY. But that's not part of this discussion because those just started training. They're not part of the YMAX. Okay, so basically, I really don't like YMAG. I think if I was personally doing it, I would just pick out the better stocks that are part of YMAG and not bother with the rest, and I'll explain to you why. So if we look at YMAG over here, let's look at their dividends. So here you see they went into weekly payout schedule, and so the first few weeks they were kind of hectic. This one over here, this happened when Tesla was really cheap. It was like around $12-13, and they paid $1.09 dividend. And so because it was really cheap, and Tesla is part of YMAG, so because they have equal weighted in terms of dollars shareholding, so they had a large position in Tesla at the time, and they didn't rebalance yet, so this dividend was really high. But what happens with YMAG, and you will have this every week going forward, this group C right here, it will always be low. It will always be like around 5-6 cents, or just like lower than the rest of the dividends. And so the changes that I have made to our YieldMax page, basically, here I color-coded YMAG because it's on a weekly schedule, so you can see YMAG is part of every group payout. But I also color-coded the corresponding holding of YMAG that is paying out this week. And so you can see next payment for Group C will be in 6.5 days, and it will be MSFO. And so we'll get this lonely small dividend from MSFO. Okay, so basically you can see this countdown clock, and you can color-coded corresponding YMAG funds that will be paying that week. And so I added this table of just the YMAG funds, so Magnificent 7, right here, and you can see the first 4, NVIDIA, Tesla, MZ, and Phoebe, they're doing pretty well. Like NVIDIA has returned really great in the past 12 months. Tesla doing all right with dividends reinvested like 32.5%. MZ is doing quite all right. It's pretty NAV stable. Phoebe also NAV stable. Today they declared the dividend. It was really low. It was like 37 cents. But hopefully they'll do better next week, because actually Phoebe is up because Facebook is breaking all-time records. And you can see over here. So, by the way, if you have never used this page, first of all, I'll link it in the description below, but we have this VS button right here, and it basically takes you to the comparison page between the YieldMax ETF and the underlying stock. And you can see that basically Phoebe tracked Facebook pretty close. Like, yeah, Facebook is clearly better, but who could have expected that, it's gonna go from, let's look at the price chart. It was $325 a year ago, and basically doubled after like quadrupling from $80 in a year. Anyway, so the first 4 funds in this group, NVIDIA, Tesla, MZ, and Phoebe, they're pretty good funds, and I actually have a holding in each one of them. But then this last 3 right here, Apple, MSFO, and GUI, they're they're lackluster at best. Like, you can see their 1-year performance is 18% with dividends reinvested and 14% without reinvesting dividends. And by the way, you have to pay taxes. These are unqualified dividends, so you basically pay like a short-term capital gains tax rate on them, so which is whatever your tax bracket is, or your cumulative Yeah, your regular tax rate essentially. Not a tax advice either, but you have to pay taxes on these dividends. And so after dividends, it's not that good of a performance in the year, considering that S&P 500 is up like 27% in the same time. So, and these are income funds. So basically, I would not be buying, and I'm not buying. I don't plan to Apple, MSFO, or GUI. And the reason for that, like I'll just quickly show you, there is very little volatility in them. So implied volatility for the options. And if you are not aware, YieldMax is making money on their funds by selling weekly or sometimes bi-weekly call options, covered calls. And if the implied volatility is low, then the premiums are low, and therefore the returns and payouts are low. And like Misty, which is their best performing fund, MSTR has implied volatility of like 150%. And so that's how they're able to return in 9 months, just like in dividends and price appreciation, 175%. And if you reinvest the dividends, like 255%, 254. So yeah, going back over here. So let's take a quick look. So Phoebe. So Facebook is $1.5 trillion, but this stock is kind of explosive. However, Apple, it's not going to move 30% in a month, and so therefore the premiums will be the option premiums, and they will be low going forward for a long time. And so it's unlikely that Apple will perform well. Same for MSFO, which tracks Microsoft, also like $3 trillion company. Google, wait, where's the Google thing? Somewhere, but anyway, Google is like a $2 trillion company, also unlikely to move a lot, and therefore you're not going to see a lot of volatility in these three funds. Bottom line, if you want something like a YMAG, what I would do, and actually what I do, I just own these 4 funds right here, and I avoid this one, because like by buying YMAG, you basically about 40% of your investment is not doing well. And if you want to, create your own YMAG, again, not a financial advice, but what I would do is I would take like the money I want to invest, split it equally into 4 parts, just buy these 4 funds, which I actually do, and that's it, call it a day. And that's why I don't like YMAG. Okay, but what I want to do is like walk through this comparison right here. So as you can see, this I just loaded. So in theory, YMAG has outperformed YMAX by about 7%. From the inception of YMAG. And here's a kicker right here. So YMAX started trading on January 17th, but YMAG started trading a few days later, a couple weeks later, on January 30th. And so this comparison actually starts on January 30th, and that's why it's a little bit like it is equal comparison in terms of like performance of these 2 funds. But the real returns this year for YMAX are actually 32.5% and 27%. So 32.5% if you dripped or reinvested dividends, and 27% if you just like bought the shares in the beginning, right over here on January 17th, and held them and collected the dividends as cash. Okay, so in this particular case, reinvesting the dividends is actually more profitable than holding on to them. All right, but over here you can see that return since the inception of YMAG has been only 28.5% for YMAX and like 36% for YMAG. And the reason for that, if you look at the price chart right here, you can see that on that date, YMAX was trading at $20.50 and YMAG closed at $19.89. And so the comparison is based on the closing price on that day. And if we scroll down a little bit right over here into like a table that we have, comparison table. So if you invested $10,000 on that day, you would have only 488 shares of YMAX and 500 and almost 3 shares of YMAG. Therefore, your starting number of shares is like 15 more shares in favor of YMAG, and that also kind of feeds into this discrepancy in performance. Now, if they both started at $20 on that day, the performance would be more equalized. But basically, the way it works is right now YMAX has a better share price, so it's almost $1.40 lower than this one, but also comes with a better yield. And now that's not guaranteed, but historically they always paid more than YMAG. So basically you buy more yield for less money, and historically it performed very well. Now this week that we had a couple days ago, that was an outlier. I think it will be like, check this out. Their highest dividend before the split, before going weekly, so they were paying monthly before, right over here when they were split into groups. The highest dividend was 73 cents per month. All right, and if you divide that by 4, that's about 17 cents. 16, 17, doesn't matter, like in that range. And so since then, they were actually their average payout has been around 20 cents. So they're already doing better than they were doing over here. And also, these are weekly payouts. So a 28-day span for 4 payments, so you multiply 20 by 4, that's 80 cents. So each kind of like 4-week period, at least for now, is giving you more than you received as the highest dividend from YMAX. So that's why I think, like, as far as the actual returns from the fund, I believe the YMAX will do better going forward. And with YMAG, again, if we go back to over here, you can see that Group C will always have only MSFO because it's a 7 stocks group, Magnificent 7, and so they split it 2, 1, 2, and 2 funds. And so you will always have the situation where the payment for Group C will always be low, and because it's always MSFO, they don't mix that. Anyway, so I think I personally like YMAX better. I think it's a better investment, and if I were to do YMAG, I would just choose the 4 stocks, the best performing 4 stocks versus like this really like slow Apple, MSFO, and GUI. All right, guys. So a couple changes we've made to this page. First of all, I removed some extra text that I didn't feel was useful, and I added some color coding over here. So this orange is basically indicates fund of funds. So YMAX, YMAG, and Ulti. Ulti is like a whole different animal. I won't go into it. But over here, if you click W or VS on YMAX or YMAG, you will actually compare one against the other. Okay, and then over here in the blue, I have Crash, Fiat, Dips, and YQQQ, and those are short funds. They're basically playing their strategies that they're hoping that Tesla coin, Nvidia, or QQQ will go down. So far, that hasn't been the chance, and that's why you see a sea of red right here. It's all red. They're not doing great, and these funds, ORC, Merni, and AIYY, I made them brown, and it is, as I put a legend over here, it says self-explanatory, because these funds are poop. They are, the underlying stocks are poop. That's why their performance is horrible. Now ORC has done a little bit better this year because they actually invested in Palantir and SoFi and Tesla, and they already unloaded that, but they captured the returns. But AI, like RK, it has been the biggest destroyer of investor equity ever, probably. Maybe outside Enron. Like, I think they lost their investors like $15 billion or something like that. It's like a pretty horrible fund, and you can see it's like flat for the whole year. Anyway, because it didn't have the massive drop, they actually, ORC actually has like a somewhat positive return for the year, but still a negative negative price return. And I just think it's poop, and I don't like ARC ETFs. Anyway, yeah, so basically at the top over here we have the best performing. Now this is not automatically sorted. Like, for example, we have also like alternative high yield ETFs from non-YieldMax providers, and they're sorted by best performance. So right over here, BTEX is the best performer, but that's basically because it's a 2x ETF of Bitcoin, which actually pays dividends, funny enough. And then number 2 performer is one of my favorite stocks, and I've done quite a few videos about it. Recently I compared it to YBIT. I think I should also put YBIT in the poop pile, but basically, so I did a comparison, but I'll just show you. So YBIT sells covered calls on BITO, which itself pays really good dividend, and itself is a high yield ETF. Like, it's not an income ETF, it's Bitcoin strategy ETF, but like you can see the returns on YBIT on BITO and YBIT since the inception of the YieldMax YBIT, 6% for YieldMax fund and 34% for BITO, and therefore, like, it's clear that YBIT is poop, and I just don't. I think it's a stupid concept because like it sells covered calls on BITO, which itself pays like really high dividends. You can see right here, insane yield, insane dividend amounts, and it's been doing so for a long time. And on top of that, provides really good returns because it actually tracks Bitcoin performance to a good degree. It basically trades Bitcoin futures. Anyway, So yeah, that's the that's basically the table over here, and I added also like this whole YMAG or Magnificent 7 table because it's kind of difficult to see them over here in the sea of other funds. Where I'm going with this is, like I said, I like YMAX. I have several shares of YMAX. I have a position, and I would love it even more if they got rid of this poop, the OARC, Merni, AIYY. Probably also get rid of Zomo, which tracks ExxonMobil, and probably also get rid of YBIT. But actually, YBIT, it's a funny story. YBIT, like I already said, I don't like this fund, but you see, they have like 50 million NAV, or an assets under management, or market cap, whatever you want to call it. And if we look at YMAG Holdings, so this is a funny part. No, this is YMAX. So YBIT, where is that sucker? Right here. So they own 1,087,000 shares of YBIT, which is about more than 20% of the total holdings, of the total share count. So the total shares outstanding is less than 6 million right here, 5,875,000, and again, YMAX owns 1.08 million, or 1,087,000 shares of that, so more than 20%. The good thing is they used to own over 40% a few months ago, so the share is going down. But I think it's kind of weird that that YieldMax itself owns more than 20% of the whole fund. I kind of don't like that. Yeah, so if they get rid of all these poop funds, I think it would make the YMAX fund better. And like, think about it, AIYY and Merni, they're so small, and like, I think just like close them down, 33 billion for AIYY, or million, 27 for Merni. Just return money to their investors. Like, you've milked them long enough. They lost enough money with this fund, because like, what's gonna happen to it? Reverse split again and lose more money? I think this fund is horrible. If you reinvested dividends with it, you're down 50%. If you didn't reinvest the dividends, you're down only 25% since inception. So, yeah, I think this fund should just get closed out, and then that would make YMAX even better. Now, probably they're not going to listen to my advice and not going to do it, but whatever. I think it would make the fund better. Now, I don't feel like constructing my own version of YMAX. I already have like some shares and of different funds, like this here, this top 6 I have. All of them also have Nefli. I really like Nefli. AMD has been kind of not doing so well lately because AMD has dropped, but I think AMD is not going anywhere. They have bright future, so I think it's just temporarily. PP and SKU, I like. YBIT, I think is horrible, and I already made a video about that. Right here, it was just very recently, a couple weeks ago, Beta versus YBIT. Guys, you should probably watch it. Yeah, so with that said, let's move on to the Cyber Week sale. I'll just quickly demonstrate and explain what it is. As far as Cyber Week, now, if you're a YieldMax investor, is Cyber Week, is the pro version of this website that we offer, is it good for you? And I think that it could be useful if you do like stock research and stuff, if you want to invest not just in YieldMax funds, but if you want to research the underlying. Like, for example, if we go to this comparison page, so the pro version or pro subscription to our website gives you access to see all these additional reports that are not available for free. You can see EPS versus PE ratio. You can see free cash flow and free cash flow per share, and all of these very important metrics. And like, you see these are blank because, or empty, because NVDY doesn't have actual earnings. But when you compare stocks, so we can compare Apple, for example, versus Nvidia, and this is a stock comparison tool, which is linked at the top of the page. But you can basically compare the dividends for each company side by side. You can see their dividend payout ratios, and so both of these companies are very safe as far as dividends. Their share price, that's normal. Their PE and EPS for each company side by side. Free cash flow and free cash flow per share. Free cash flow versus stock-based compensation. Revenues versus net income for each company. Cash versus debt. So when you are picking an investment, these metrics, they're in my opinion, are really helpful to visualize like which stock is doing better, which has more potential, and is, in my opinion, which stock might be a better investment. And so the subscription, the pro subscription, gives you access to all this data, as well as analyst estimates. Like, for example, analysts expect Apple to be basically flat going forward. They're already not growing, and the only way the share price is going up is because they're buying back shares. Like you can see share buybacks, they're buying 2.75% each year, about 2.5 for the last 10 years. So in the last 10 years, they bought back like 30% of their shares. So that's quite nice. But the estimates for NVIDIA, they're a lot more aggressive and a lot more promising. And so you basically can see all these metrics and ratios side by side. And I feel that it's very convenient when researching stocks. Even if you're just investing in YieldMax, like picking out a stock or picking out a YieldMax ETF, just blindly based on yield this month, because this yields here, this is based on the last dividend payment, okay, so which was 2.4 right here for Misty. But if you look at their history, they went down as low as $1.85 over here. So will you continue getting $4 dividends? That's where doing research on MicroStrategy, for example, I mean, MicroStrategy earnings, it has nothing to do with their earnings, but something like NVIDIA, Coinbase, Tesla, Amazon, you know, like you're picking out a fund from YieldMax, but you don't want your investment to be destroyed by, you know, by the poorly performing underlying. Like, so this is a great example, mRNA, which is Moderna, you know, like they were high flying during COVID and whatnot, but then now they're not high flying anymore. because look at the stock of Moderna, and the same happened to mRNY or Myrni. And so like doing the in-depth research on the underlying, I think, is important. But yeah, so you basically, this 40% off discount, it's for lifetime. You can pick a monthly or annual subscription, and this is the regular price, and so it's 40% off of that, which would be like $9 for a monthly subscription and $72 for a whole year annual subscription. And like $9, it's like one frappuccino. I'm just saying. But anyway, the pro version is not for everybody. If you like just want the YieldMax funds, you can basically just look over here. Now, it's not guaranteed that these numbers will stay the same. They always change. But I think it's quite useful to see the overall performance over the last 12 months at this table. And yeah, okay, guys, thank you for watching. Once again, if you have any of these funds, let me know which one you prefer, YMAX or YMAG. And if you have either one of them, let me know in the comment section below. Subscribe to the channel, smash that like button. It really helps with the YouTube algorithms. And with that said, thank you for watching. I'll see you in the next video. Peace.